Okay, everybody, it's me, Gregory Mannarino. Sit back, take a deep breath. You ready? And just relax. Tuesday, July 5th, 2022, and there is a lot going on right now. Let's start off with that. Right now, the propaganda ministries, we're talking about Bloomberg, Fox Business, CNBC, they're all shocked and they don't understand what's going on. Our economy, according to what they're telling us, what the propaganda ministries are actually saying, the U.S. economy is slowing down faster than anyone expected. Oh, really? How about no? How about every single person who follows this blog realizes that we are way beyond recession. A recession would be a step higher from where we are today. Our economy is done. Globally, it's in free fall. Globally, you got emergency action policy by the ECB, European Central Bank. You got the Federal Reserve here, unconventional policy to try to stabilize the debt market. And are you watching the 10-year yield this morning, people? It's 2.81. Keep in mind, we were just at 3.5. All right, an unbelievable amount of cash is making its way into the perceived safety of debt, and that is forcing down the 10-year yield and causing all kinds of other issues in the yield curve. We also found out on the economic front that housing prices seem to be coming down, and this is getting a lot of people rattled as well. Some parts of the country are seeing homeowners slash the prices of their homes at 20% or more. What you need to do here is hashtag ask Chuck. Chuck is the real estate guy. Go talk to him about this, and I am certain that he's going to have a little more insight into this. So what we got this morning is interesting. Again, we have this unexpected, faster slowdown in the U.S. economy, and this is global. As inflation continues to surge out of control, no end in sight. Remember, transitory? Oh, that didn't work out. Remember, peaking? Oh, that didn't work out either. It's the lies. It's the distractions. It's the propaganda. It's the bullshit. And you all know that. It's pretty incredible. All right, so what we're seeing today in the market is also a safety trade. How do we know it's a safety trade? Are you watching the dollar or the relative or comparative strength of the dollar? Markedly higher, over 1%. So let's put this together so you can understand. Stock futures lower across the board. Markedly stronger dollar. So right here we have a market. Trading doesn't start for about 40 minutes, 38 minutes, okay? The setup for the market right now is to drop at the open. Now, why would that be happening? Again, not one, but 2 rounds of pretty bad economic news. It just doesn't stop. Maybe the market's actually becoming real. I guess we'll see. It's going to be interesting, in my view, also to see how the propaganda ministry spins this. Again, they tell you something, like, for example, the U.S. economy is unexpectedly slowing faster, but tomorrow or the next day, they're going to tell you the polar opposite. They're going to tell you how great we're doing. Again, they're trying to convince you that even what they're telling you isn't real. It's a psyop, people, and you know it. This is some kind of twisted mind game. Going back to the market real quick. So we have a safety trade. Knee-jerk higher in the dollar, the comparative strength. And you knew this. I've been explaining to all of you for a very long time that you're going to see this phenomenon. Here's where Donald Trump nailed this to the wall. Donald Trump said that the U.S. needs a weaker dollar. Why? When you have a dollar whose relative or comparative strength is high like we're seeing now, multinational companies, big corporations here, they don't do as well. So what happens is it hits earnings. You understand? So although a weaker dollar is obviously abysmal for people, and we're seeing the effect of the absolute strength of the dollar continue to fall into a crater, surging inflation, the fact of the matter is, for multinational corporations, you don't want to see a strong dollar. You want to see a weak dollar. This boosts earnings and you get the effect of the market. Higher, 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 higher. Okay, so there we go. Donald Trump did nail that to the wall, obviously. Okay, let us move forward here. On top of stock futures being lower, on top of the knee-jerk higher in the dollar, 10-year yield continues to nosedive. This is the phenomenon that you and I have spoken about yesterday. I've been talking about this for quite a while. Even Chuck has mentioned it. It's kind of an interesting set of dynamics in place here. This is central banks, people, buying it all, which is massively inflationary, and you know it. And what's going to happen? Nothing. Absolutely nothing. And the Federal Reserve with their repo scheme trying to add artificial liquidity to the market. Understand, and I covered this recently too, a liquidity crisis is inevitable, meaning an entire lockup of the system. This is really what happened during the last meltdown of '08. It wasn't so much that the stock market was cratering. It was the fact that credit or debt, credit or debt, same thing. Isn't that interesting? It wasn't flowing. So what happened? You had central banks, capital injections into the market. They're going to do the same thing, okay? But that's also going to be, by design, massively inflationary. Realize what you're seeing. There's a wipeout of an entire class of people, and they're doing it via inflation. They're choking people to death here. And of course, you're going to see the Federal Reserve Chairman Yellowstone Powell and whoever freak they want to pull before some type of congressional finance committee, and they're never going to bring this up. Because again, it's all bullshit. It's all a freak show, and you know that. Let us move forward. Bitcoin, crypto is still hovering around the same as of late. Last time I looked, Bitcoin was around 19,500. Gold and silver catching a little bit this morning, despite the fact that we're seeing a safety trade. Clear safety trade, people. Stock futures lower, knee-jerk higher in the dollar, and this is a substantial one, over 1% here in the dollar, and that 10-year yield dropping. Safety trade. Are we going to have a fear trade? Let's see. Let's see what happens today. A big sell-off would mean a fear trade in the market. Crude oil, or West Texas Intermediate, the one that most people watch here, WTI, is about $108 a barrel. Now, I sincerely believe we haven't seen anything yet with regard to energy prices, food inflation, inflation in general, as central banks around the world can, none more so than the European Central Bank with their emergency monetary policy, and the Federal Reserve with their unconventional policy to try to stabilize the debt market. Well, this is a method here to inflate, as is this war that President Imbecile keeps throwing tens of billions, hundreds of billions of dollars at. And you are footing the bill, okay? He has a blank check to do whatever he wants to do. Congratulations. Anyway, so that's the story this morning. Let's just recap real quick. There appears to be a safety trade this morning in the market. Stock futures lower, 10-year yield lower. You know about this, the phenomenon I've been talking about. It's an incredible thing. You got this knee-jerk higher in the dollar. That is a safety trade. Let's see how this plays out for the market today. Is the Federal Reserve going to step in here? You know, they do have a trading desk, New York Fed, plunge protection team. Are they going to start buying the market as well? We already know they do. This is no secret here, okay? They have a trading desk, but they don't do anything. They just look at it and play with it and maybe, I don't know, maybe lick it. I have no idea what they do. But obviously, whatever they tell you that they're not doing, like, oh, we're not buying stocks. Oh, no, we're not buying them. Of course they are. Okay. I think it's pretty obvious to everyone that follows this blog. Anyway, that's the story, people. I think we have a really good idea. The economic news, of course, it's unexpected. It's always, no one saw this coming, that our economy is slowing down faster than expected. No one saw the fact that this housing bubble 2.0 is going to burst as well. Oh, no one saw that coming either. Oh, really? How about, yeah, you and me did. And it's kind of an interesting set of dynamics in place. People, this guy here loves you a lot. Again, a huge shout out to those of you who support my channel, support my work. And I will see all of you at the end of the day. Can't wait. I really can't. this whole thing, it's just, what could possibly be more entertaining? I'll see all of you later. Bye.